Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's February 20th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. So I just got into Baltimore, literally a couple of hours ago. So I'm taping a special video for our Curzio Equity Owners token, which we launched last week. Pretty exciting times. But leave it to me to plan this trip when Baltimore's about to get hit with a snowstorm, expecting 5 to 6 inches, maybe more. But since I just got into Baltimore and I'm taping live at the studio, and just to give you guys a little background, I don't know if I tell you, I've been using these guys at the studio, 16 West, great guys, for probably a good 5-7 years. And whenever I do my interviews or tape my podcast, my Wall Street Unplugged podcast, I actually do it through Skype and call the studio, and they connect me, and they're checking the sound levels. But their main studio's in Baltimore, and when we do tapings, I just fly over here, and that's what I'm doing here, which is pretty cool. But with that said, since, again, just got off the flight not long ago, it's going to be a little bit of a change in format today, and there's not going to be a guest this week, which means that you're stuck with me. And stop grunting. Don't worry. I'll entertain you. Even if I have to talk about declaring a state of emergency to build a wall, or how one 29-year-old socialist just prevented 60,000 jobs from coming into one of the most depressed areas inside the 5 boroughs of New York City, which, I don't know, arguably could have become the next Silicon Valley. I'm sure I got your attention now if you're a Democrat or Republican, because I know you're grunting, but I know you guys. I know how to get you going based on the emails you send to me. But really cool times, and reporting live from Baltimore. And I wanted to give you guys a quick update on the Curzio Equity Owners token. So we launched it, and in our first 4 days, I'm not including the Valentine's Day or the Monday that we had off, but in our first 4 days, we're pretty close to hitting our $3 million soft cap goal already. And that's just from you guys. I mean, if you've been listening to my podcast, you're a subscriber, you receive a personal email from me with a discount attached for anyone looking to invest in our CEO token. As I explained, just in case if you listen to this for the first time, our offering is only available for accredited investors. But if you're not accredited, all right, look, guys, this is about you. I mean, I'm looking to raise money to grow Curzio Research into, one of the largest financial publishers. So my goal is to educate you, hire amazing analysts to write newsletters under our brand, right, for you. Talking about some of hundreds. I interviewed over 1,000 people, hundreds of them are stock market experts who are friends that I've interviewed in the podcast for over the past 10 years. I know they're interested in writing newsletters. And the reason why I'm doing this, because right now, as I explain it, it's, the industry is no longer about you. It's no longer about the customers. It used to be that way. Or a place mom and pop investors turn to get independent research ideas from, basically someone they could trust outside of Wall Street. You look at the research from Wall Street firms, and look, if they're not going to get investment fees, a lot of these guys aren't going to cover you just to cover you and provide research for you, especially on the small cap level. You look at companies that have good balance sheets, most of them have no coverage because, they're not going to do any debt offerings, they don't need to raise money. So why am I going to waste my time providing research on those? So a lot of it's biased. But the newsletter industry, hey, it's independent. Unfortunately, over the past few years, it's really lost its way. With overhyped promotions, calling analysts with just a few years of experience legends, promising of a market crash on a specific date. Get it for October 21st. If you don't, the market's going to crash 30, 40%. Come on. How many times, think about it, how many things have you read that the market was going to crash at a promotion over the past 7-8 years? Think about that. And we're close to our highs. Again, things to sell you something. These types of promotions, they're going to bring in a ton of new customers at the beginning. But then what happens, right? Most of you guys get really disappointed. Not just the performance of some of these stocks, but the fact the promises they sold you on were basically bullshit. Sorry to curse, but it's true, and you guys know it. I'm not saying every editor that we hire, Curzio Research, or, editors we have currently that we're not going to get wrong from time to time. We all do. Everybody does. I'll give you Buffett, give you Icon, no matter who you are. But, we're always going to have your back. Exactly how to manage those losing positions, limiting your losses. I say this a lot. Of course, we have to get it right more times than we get it wrong because, believe me, I'm going to hold every single editor accountable. I'm not going to put someone in front of you that has 4 straight losing years of crushing you guys. I mean, that's my job to move on. But this is the type of research you should demand from your newsletter editor or the person that you're following. And make sure that person's out in the field. They're not sitting behind a desk because, guys, trust me on this. Trust me. As someone's been in this industry for 25 years, you're not going to find the best ideas sitting behind a desk. Get into those biggest trends early unless you're out in the field, going to conferences, speaking at conferences, being in the room, traveling, networking. I can tell you one thing from our analysts, from me especially. If we say a stock or whatever idea, whatever it is, has 10 times or 20 times upside potential, it's not just a number that we're picking out of thin air. I mean, how many times have we heard that? Bitcoin's going to $1 million. The stock's going to... There's no research. There's nothing behind it. If we're saying something's going up 10 times, 20 times, it's because that's what our research suggests. It's based on the numbers. It's real analysis, models. That's what we see. When I look at the financial news industry, it needs to be disrupted. I mean, it's lost its way. It needs to focus on the customer again because, I'll be dead honest, and I've researched how many companies over my tens of thousands probably. And over this time, outside of monopolies like cable companies and wireless providers, right? Excluding those, none of these businesses succeed unless they treat their customers right. You look at Amazon, you look at Microsoft, you look at some of the biggest companies, you look at Netflix. They treat their customers right. They provide something that they want for a good price, for an affordable price. They don't lie to their customers. They don't write crazy, nutty promotions, trying to get you in, burn and churn, turn and burn, whatever you want to call it. So while launching the security token offering, Curzio Equity Owners, it's pretty cool. It's innovative. It's something that nobody's done really. And this structure is going to be much better for you, for investors, since, you're going to be able to trade this token after a year instead of, having your money locked up for many years if I did a traditional private placement, or until Curzio Research gets acquired, or does an IPO on a major exchange. But even besides that, even though it's exciting, and the token industry is really starting to take off, it provides so much news. Guys, check out our token tracker websites for free. You don't have to put your email address in it. Just trust me. Start educating yourself on this. The news that you're going to see has come out over the past couple months is amazing. Despite that excitement, at the end of the day, guys, you're investing in me. Right? You're investing in my team. You're investing in Curzio Research because you believe that we can turn this business into a $100 million plus revenue generating business on an annual basis, just like many of our competitors. It sounds crazy, but this happens more often than you think in our industry. I highlighted this, and I said if you read the material, not to beat this to death, but the financial newsletter publishing industry is one of the most, if not the most scalable, high-margin business on the planet. Unit costs are highest at the beginning, and then much, much lower as you keep. It's a matter of giving passwords out. But the margins are incredible. But if you have the right team in place, the right IT in place, the right attitude, and have the most important thing of all, which is original content, original ideas. You wonder why Netflix is one of the biggest companies in the world, in media companies. You can get to that level very quickly. I'm talking about less than 5-6 years. I've seen it happen several times. But getting back to my original point here, we're still in the private sale of our token offering, which is the first 2 weeks I launched it just to you, just my followers. Nobody else gets to see it. Unless they find our website from some crazy reason. And that ends on February 28th. So after that, I'm going to open this up to the world. Hedge funds, crypto funds, family offices, accredited investors outside of our list, which is why I'm in Baltimore right now. I'm going to tape you a special video. It's going to be sent out to people outside of my network. The format's pretty cool, where Farnoosh Torabi is going to be interviewing me. Farnoosh is awesome, best-selling author, Host of the So Money podcast, close friend, because we worked together at TheStreet.com many years ago. Always kept in touch. You know, I'm sure she's pissed off that she's traveling to Baltimore in a snowstorm to interview me. That's beside the point. Definitely have to make that up to her. But just really cool things. But on the STO front, everything's great. Again, closing in on our soft cap of $3 million. Once we hit that, it's a go. Definitely a go. Looks like we're going to hit that pretty soon. I'd guess, hopefully less than a week. I mean, we are seeing, you know, more and more people come in, which is great. And I have to admit, it's surprising a lot of people. I mean, our lawyers are surprised. Wow, I can't believe how quick the demand. And Securitize, who's our partner, we're the best compliant security token offering platform providers. So people are surprised how quick, you know, it is. But to be honest, and I want to say this the right way because you guys know me. I'm a humble person and I'm not arrogant, but I'm not really surprised. I mean, look, if I had to guess, probably 70% of my subscribers, which are many of you that are listening to this right now, you subscribe to other financial newsletters outside of Curzio Research. And I know you know what I'm talking about when I say this industry is in need of a change. It's not some fake mission I'm on where, you know, I'm creating a problem that doesn't exist to scare the hell out of you so, you know, I can sell more subscriptions. I mean, I'm in the field. I love what I do. I talk at conferences everywhere. San Francisco, Vancouver, New York, LA, Florida, coast to coast, even internationally. This is what I hear from you. A lot of you listen to this. You've sent me emails. I've answered them personally. If you invest in our token and you had any questions, I called you personally back. It's a personal touch. But this is what I hear from you. These are the complaints I hear, and I know I see it as well. So I know most of the editors, publishers out there, and guys, not all of them are bad. I mean, some of them love what they do. They're out in the field. They're passionate. I see them all the time. But there are some I know personally that should be really ashamed of themselves because this really is a great business. I mean, having an independent source where we're not getting paid by any company to recommend them, and our job is to give you great ideas, unbiased, educate you, right? That's what you're paying us for. That's our responsibility to give that to you, to use our networks, use our experience, and bring those great ideas to you. You know what? It's a shame the industry is more about the publishers making their sales numbers every year right now than actually giving sound investment advice to their customers who, you know, you guys pay thousands of dollars for subscription costs sometimes. You're trusting these publishers to you know, give you guys unbiased quality research from experienced analysts. Anyway, I won't go on and on about this. Just want to give you an update on our Curzio Equity Owners token. If you're a credit investor, you no longer have to email me to get anything or any advice, whatever. If you want more information, just go to our new website, www.curzioequityowners.com. Our white paper is there, our safe agreement's there, securities agreement, everything that you need to know, all the risks of investing, everything. You know, and I'm really proud of something too. There's one thing that I am proud of with this whole entire thing is we've been getting a lot of compliments thus far about how easy the process has been to sign up. And we worked really hard on this. Actually, probably extended our offering another month to make sure we had this right, testing everything. Creating a special investment guide, which walks you through page by page through everything you need. We put the documents in DocuSign. Wouldn't that be great if everyone did that with private placements? If you guys invest in those? You got a 60, 70-page document. You got to figure out what 13, 12 pages to sign. So we have everything in DocuSign for you. We provide an 800 number for investors who have any questions. Well, we haven't had too many calls. The ones that did, I mentioned earlier, I called them personally to answer them. It's a big investment. We have a $25,000 minimum. It's the least I could do. You're investing in my business. You're investing in me. It's the least I could do is give you a call. It's been pretty cool. That was one of the things we'll worry, right? It's a new business, new market, right? A lot of people, first time they're investing in a security token, right? We're one of the first out there, so I'm glad the process is working. Securitize has been great. And guys, again, if you want any information, you can go to our Curzio Equity Owners website and, you know, read the white paper, read anything you want. If you have any questions, again, feel free to send them to me. Now, I wanted to move on because I have a couple of market-related topics. I feel like we've been focusing on STOs and the Curzio Equity Owners security token and things like that, which is cool. Again, this is our company. We're launching this. It's a very, very big event for us, and we've been, mentioning it a lot on podcasts, but I want to make sure that I'm talking about the markets as well, right? So some of you are not investing in CO tokens. Some of you have no interest in tokens, but this is a financial podcast, and there's a couple of things I wanted to talk to you about. The first is the overall economy. Sounds like a boring subject, but I'm going to tell you something. If you watch CNBC or Bloomberg and you have 10 analysts on, it's basically split right now. 5 are going to tell you the market's overvalued, we're going to go into recession next year, be very careful, and 5 would say, you know what, it looks pretty good, I think the market's going to go higher. But it's split. I mean, nobody knows what's going to happen in the future, right? I wanted to cover Walmart earnings as well because that relates to the economy. Well, Walmart had really good numbers. I wouldn't tell you to go buy the stock at 21 times forward earnings. I think it's expensive here. But they showed e-commerce growth. They're spending a lot for that. I think next numbers are going to be very hard, the comparisons compared to this year. But it shows you just those numbers, how, they reiterated their guidance. Their numbers were a little bit better than expected for the quarter. But, that's a lead. I don't know if it's a leading indicator, but it's a big indicator of the economy, right? I mean, how many people go to Walmart, they spend money? I mean, it shows you that the economy is pretty solid right now. But then you have international risk, right? Growth is slowing. Europe, Asia, emerging markets. Housing numbers are slowing here. Manufacturing is okay above water. Wages are going higher. You see what I'm doing here? Positives and negatives. Why is that so important? Because over the last 8-9 years of this bull market, yes, we saw 2 or 3 minor pullbacks, even though December's pullback was pretty sharp. I shouldn't say it's minor, but a couple of corrections in there. But since the credit crisis, the market has done best when it's a Goldilocks economy, when it's not too hot and it's not too cold. We have interest rates are going higher, but the Fed said, let me take my foot off the pedal a little bit. Housing numbers aren't that good. Wages are growing. Profits are doing well. International, not really. And we know what, 35%, 40% of profits of S&P 500 companies come from overseas. But our markets tend to do great during this scenario. If you notice in August, September, it started getting hot. I mean, it was just, everything was great. Just buy anything. Everything was going up. These, technology stocks, FANG stocks were going up like 10, 15% per month over the last 7-8 months in a row. It got crazy. And then what do we see in December? It hit the other extreme. I mean, I don't know who predicted it to fall that far in December. Again, if outside of the perma-bears who've been predicting a crash for, the last 8 years and pretty much since they were born 40, 50 years ago, outside of those people. But man, I mean, it really overshot to the downside, and then we have 6-7 weeks straight up. And maybe the market comes back. I expect profit taking over the next couple of weeks. But right now, I mean, just with tariffs, it's kind of on the fence. Are we going to come to an agreement with China? Well, it might not be that good of an agreement, but everything it's Goldilocks. It's not too hot, not too cold. Yes, there's risks, but there's also a lot of positives, and usually the markets do fantastic during those scenarios. So I wouldn't be surprised if we continue to move higher. We're probably going to pull back. What are we up, like 6 or 7 straight weeks? Got to expect a pullback, and that's 6-7 straight weeks after really, really coming down and overshooting, especially during the holidays, which was crazy. When you look at the economy, it's not great, but it's definitely not terrible. I don't see huge growth, but I don't see a recession. Earnings are slowing, but we're not going to see an earnings recession with negative year-over-year earnings. No, they're probably going to grow like 7%, 8% around there someplace. That's what I'm seeing with the economy. So if you're still long, you might see the markets pull back again. We're up a lot over the past few weeks. I think a positive outcome with tariffs is already factored in. Slower earnings growth is already factored in. So we'll see. Not too many great catalysts going forward, but if we do see stronger than expected earnings, or if we see the international markets bounce back, if we see China bounce back, which has got decimated since February, and we're starting to see a lot of those stocks bounce back now, then you can see some more upside. to the market, to the economy. But remember, this is what you want. If you're an investor, you're a long-term investor, and you're looking at where's 2019 going to end, you want to see not too hot, not too cold. And how do you measure that? Just watch CNBC. Every other guy. It's crashing, it's going higher. It's crashing, here's why you have to buy stocks. In December, everybody was telling you the market's going to crash, it's going to get killed. And in August, September, everyone's like, it's going higher, right? So the contrarian indicator, that little light in your head, should tell you to do the opposite. But right now, when you're seeing those mixed results, it's usually a positive for stocks. And that's why you're probably going to see a solid ending, at least, not ending, we're still kind of in the early stage of 2019, but I think the second half is going to be stronger than most people suggest, and we're going to finish even higher than where we are today. One more topic I wanted to cover, which is interesting, is a company called Navient. It's a company that I recommended at a higher price and we stopped out at. And Navient is the largest student loan provider in the world, or in America. And they just received a takeover at $12.50 from two private equity companies. And one of them is a 10% owner. I believe the other one's an investor. But this is a company I followed for a long time. And it is an amazing company. Because they're looking to buy it at $12.50. So the stock, it was up about 10, 15%. It was only like a 3, 4, 5% premium or something to where the stock was trading. And Navient rejected the offer and said, we're worth a lot more than $12.50. We're worth over $15. I'm going to be honest with you guys. This stock is worth probably over $22 a share. And I made my mistake because I underestimated the headline risk, because every politician looking to make a name for himself, is easy to come against Navient and just destroy them, right? Because it's not the person who took out the debt's fault. Never. It's all the government's fault. It's everybody else's fault. And Navient was kind of part of the government. I mean, in 1972, this Sallie Mae, politicians created Sallie Mae. And Sallie Mae, this is before they split off, Navient. But they wanted to increase the amount of capital available for student loans, just making it easier for students to get loans. Sounds familiar. Sounds like the housing crisis, right? Yeah, kind of. Hey, let's make it affordable for everyone to own houses. Even though they can't afford it, let's just make it affordable. Fine. Make it easy for students to get loans. This way they just get loans. And now they're in the average loans around, $30,000, $40,000? But this company, man, you want to talk about shady and politicians and everything. You go back to the 1970s when this thing was created. They would give it a GSE status, so the government-sponsored entity, which basically means the government's going to backstop everything, but you get the huge benefits of being able to invest, borrow money at lower rates, lower capital requirements. So Sallie Mae, just became a huge organization. And all of a sudden, it was, by 1991, 27% of the federal loans, the federal student loans, were under Sallie Mae. And to put that in perspective, Citi was the next biggest with 4%. They had 27%. So what happened from 1975? What was it? $300 million in loans, and then by 1995 it was $47 billion. It's a little bit of growth there. 1996, Sallie Mae said, "Hey, you know what? We want to reorganize. Now that we use the GSE status, we use the government to backstop everything and allow us to borrow at lower rates and build up this huge, massive portfolio of student loans." They said, you know what? We'd like to be a private company now. You know why? Because that gives them the right to raise rates on those student loans. So then what happened? 1996, I think it was President Clinton said, okay, they're a private company now. Fully private, no longer GSE. And that's when they started getting into trouble, raising rates, going crazy, and then started generating a ton of profits. And then what happened in 2008, this is where things get interesting. This is an awesome story, guys, seriously. I'm not wasting your time. This is a great story with Navient. So in 2008, the credit crisis hit, and the government was just like, all right, we have to backstop everything. We have to backstop everything. So they basically gave Sallie Mae the GSE title back and said, just buy every freaking loan out there. Everything. And we got you back, just like they did with the banks. All the garbage, we're backstopping. Don't worry about it. We got you back. And Sallie said, okay. And they bought, just like I guess anybody would do, they just bought every single loan that they could possibly buy. I mean, it was incredible. It was incredible. I mean, the company just went crazy. You look at in 2010, it generated $600 million in profits. By 2013, they were generating $1.4 billion in profits because they basically took over this whole entire portfolio for free, and then become a private company, private label again, and then they were able to raise the rates and screw over students. So all this came to a head, and then 2013, Sallie Mae split into two companies, SML Corp. And then Navient. That's how Navient was created. And Navient paid the price. And then Michael Vick, they a lot of lawsuits, settled everything they needed to settle, and then they started creating new entities inside to help students pay these loans off, to be more forgiving, to help them out, to keep rates fixed, to try to help them as much as they can. Became a real company. But politicians didn't stop from bashing them, right? Because, again, student loans, anyone in debt right now, if you're a politician, just say, hey, we're going to pay off all your debt, no debt at all, we'll pay your mortgage, and you get votes, right? That's the society we live in today. Free healthcare. You're going to get free healthcare, free education, free everything. How are we going to pay for it? I don't know. It's just for free. It's awesome, right? Nobody has a budget. Nobody cares. The government. You don't have to be accountable for anything. Look at the post office. It's the reason why UPS and FedEx make a fortune, and the post office loses, $5 billion every year? Isn't that weird? No accountability. So getting back to Navient, and this is a company that is basically on their student loan portfolio. They're going to generate $14 billion in cash flow just off of these loans annually for the next 13 years. But it gets better. They're going to generate another $16 billion in annual cash flow every single year from their private loan portfolio. So you're looking at $30 billion in free cash flow, right? So if you do the math, what is that? $1.5 billion annually over the next 14 years. Don't figure it out in case I'm off by a couple, but around there. $30 billion? You look at $1.5 billion around. Think about $1.5 billion in cash flow. You know what their market cap is, Navient? It's $3 billion. So for them to come at a $12.50 offer, I mean, Navient's like, all right, we're worth a lot more than 15, but, I think they were being nice. They're not going to accept 15. They're not going to accept 17, but they will accept over 20. So right now it's $12.50. Man, I think it's a strong buy here. I think it's a screaming buy. You got the $12.50 down pat. It's worth that. And plus, if they do take it over and it goes private, they're not going to be in the spotlight as much. But man, those free cash flow, that is just incredible what they're going to generate. Again, hopefully I didn't bore you with that story. I just thought it's an interesting story. The politician said, hey, let's create this entity, which is give students more loans, and look what happened. Look where we are now. Kind of familiar, right? Same thing happened with housing. Now, Navient is a much better company. They're well run. It's no BS anymore. They are helping out students, but it doesn't matter. For me, I underestimated that risk, which pushed the stock down and hit our stop. But without that political risk, if you look at the numbers, man, this thing is worth at least $22 a share, probably more. So if someone's looking to buy it, you're going to have to go a lot higher than that, at least higher than $12.50. So just wanted to cover a couple of market things for you guys, right? Since it's been all STO and Curzio Equities and things like that. And I appreciate it because you guys know that we're launching this. We're trying to really build a bigger company and give you guys some great options on newsletters and hire lots of people and educate you. Again, it's a lot of fun. And, love what I'm doing. I really appreciate it. It's really cool that all this is working out. And we have so many investors coming in. Again, if you're interested, guys, just go to our website, www.curzioequityowners.com. You can find out everything. Read our white paper. Really cool stuff. And again, if you have any questions, feel free to send us an email, call the 800 number. Again, if you're a serious investor, you're really thinking about investing in it, you have some questions, I'll give you a call back personally. And if you're not, guys, if you're not a current investor, go to the website, get familiar with it. Look at our white paper. That's what we're trying to do for you, for everybody out there. We have a whole business plan outline. We're showing you the numbers. We're outlining it. Man, I don't know how many pages it is, but holy cow, I worked on that thing for months. And I shouldn't say my team worked on it for months. We did a lot of work on it to make sure it was absolutely perfect. But we're going to be marketing this to everyone outside of you guys after the private sale, and that's February 28th. So if you're interested, it's a discount we're offering. I told you guys I'm not going to offer this to anybody else, any funds at all. This is about you and growing this company. So I wanted to give you guys 2 weeks to decide, and it's amazing demand that's coming in. But if you guys are interested, again, you go to the website. If not, no worries, but just make sure you get familiar with this, with security tokens. I really think this is going to, I know, it's just incredible. Like, this industry is really incredible. It makes sense from every single level. And this is something that you have a shot to be early at the party. It's like being involved in the internet, investing in internet in 1993, 94, 95. Yes, we had the internet crash, but even the companies that survived, the Amazons, eBays, Microsofts, and stuff like that. I mean, this is your opportunity to really, you're going to get a good look at a lot of great companies in their very early stages, because a lot of companies are going to look to raise money going this route, because it just makes sense from their perspective when it comes to costs, and it makes sense from the investor's perspective, where these exchanges are going to get bigger and bigger and bigger, like T0, Open Finance, Coinbase. They're going to be regulated. And as they get bigger and bigger, it's going to provide more and more liquidity in the years ahead. And that's when you're going to see this thing take off. And you're already kind of seeing it take off. I mean, if you look at our token tracker website, you're going to see how you have guys from Goldman Sachs, they're leaving Goldman Sachs, they're leaving JP Morgan. They're starting their own, just cryptocurrency firms. They're a big believer in this, and they see it coming. And so do the major banks and everybody else. That's why JP Morgan's getting involved. It's not a cryptocurrency what they created, guys. It's not. But it's the largest bank in the world using tokenization, launching a way to transfer payments through a token throughout their business. And those people that are going to be transferring money, which is trillions every single day, they're going to get familiarized with this process. They're going to ask questions about it. Again, the biggest companies in the world use JP Morgan for their banking, for their services across the world. And they're going to be like, well, what are they doing? What's this JPM token? What is this? And they're going to start learning about it, and they're going to learn what I've learned over the past 6 months, that this is pretty amazing. So get familiar with it. Again, you can do that through our token tracker website, or just go to CurzioResearch.com. So, guys, that's it for me. And look, I really appreciate your interest in security token. Again, it's been overwhelming. All you invested in it, or loyal listeners, subscribers, I'm going to tell you this, that it's just the beginning. I'm looking forward to building Curzio Research into a premier financial newsletter publisher, and really just focusing on customers, focusing on you, what you want to see, what you want to learn, what newsletters you want us to create. And I'm going to tell you something, guys. Doesn't mean I'm going to kiss your ass if you come in as an investor. No, that's not what people who care about you do. My job is to educate you and try to get some amazing ideas in front of you and be hard on you, because, I care about you. I want you to become a better investor, and that's how you learn. I mean, that's how I learned, right? And my dad, guys like Jim Cramer on me all the time. The reason they're tough on me is because they care, So anyway, thanks so much for listening. Questions, comments about today's show, email me at frank@curzioresearch.com. And once again, if you have any questions about Curzio Equity Owners token, just go to our website at www.curzioequityowners.com, and you'll find plenty of answers in our FAQ section. And again, you'll be able to read our white paper, all of documents, anything else that you need. So guys, I'll see you in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.